right, good morning, traders. This is your free video from seasonalswingtrader.com. This morning we're going to take a look at the 30-year bond market. The U.S. Treasury bond March 2017 contract should be ZBH7 or USH7, depending on what platform you're looking at. So today, if you've been following us for any time now, you know we've been watching the bond market. In fact, we're positioned long bonds in the member service. We haven't quite gotten the bottom formation confirmation that we wanted here. You can see we've got a 1, 2, 3 projection, and we have not gotten a close above the number 2 point. We've come up here and tested it a couple times, sold back off to the downtrend line, and now trading higher. This is an end-of-day chart. Today we're trading up about 10 ticks at around 151.20, and you can see that this appears to be poised to go higher. Now, more conservative traders can wait until we do get that number 2 confirmation entry. I think, though, right now, low-risk conservative plays do warrant themselves. You can see from a seasonal standpoint, we've got the 3- and 5-year price averages. This is the 3-year, this is the 5-year price average, and we're trading right here in between, so pretty consistently with where we've been in the past. Down here, we've got a 10- and 15-year historical trend, so it's more sideways rather than ultimately bullish, but you can see here going into late February, early March, we do get that uptick higher from a historical trend perspective that does coincide with our long bias from a technical standpoint. So if we look over at the weekly chart, we've been testing the 200-day averages for several weeks, going back to December, bumping up here into the 50% retracement level. So back on the daily chart, what I do like is this number 2 point. Once we do get a trigger long, we have a price projection up here at the 161 level, which is also the 50% retracement. So that measured move is about a $6,000 to $7,000 per contract move in the underlying. Each full point, 154 to 155, 55 to 56, and so on, is $1,000 a contract. Now, there are other ways to play this. If you look at the bond option market, the bond options trade half the value of the futures contracts. So the futures are $31.25 a tick. The bond options are $15.62 per contract. So we can take a look out here and come down to the chain on the Aprils with about 30 days left till expiration. And just to give you some perspective here, like the 144s are trading around 10 ticks. So it's about $150 a contract. Now, of course, I would always recommend spreading these contracts depending on where you go on the chain. You can come out here and buy something further out for relatively cheap insurance. But just to give you some indication, we've got the 144s, 145s here on the chain. Well, where does that put us on the chart? Well, that puts us all the way down here below these last lows in December. So again, we're trading at 151.22. Selling the 145, 144s are way down here. Doesn't mean that we would necessarily hold that all the way to that level. If we were to drift lower, I think the 150 mark right here would be a good support level to watch. So if we started breaking down below 150, would probably be a sign to go ahead and exit those short put options. Now, if you don't trade futures or futures options, you can look at the TLT contract, which is the ETF that mirrors the bond market. So same type of price action. More conservative traders, again, would probably wait until we get a breakout here or even possibly a breakout of some of this resistance up here. But going to the chain, depending on your risk tolerance and your time horizon, you could look at the March 22s or the April contracts with about 57 days left till expiration and choose your risk tolerance. I think you can come out here and do something fairly tight with minimal risk. Just play around with the strikes. So, for example, the 119, 117s are giving you around 50 to 55 cents a contract, and then the 119s would be right here below this channel support area right here. Lastly, let's take a look at the seasonal chart on TLT. You can see that right around today, actually, we start a 10 of 10 year historical price move higher, average move about 2%. Now, don't think I want to take this right here lower. You can see this is the 5 and 10 year averages. So right at the beginning of March, we trade lower before we resume the uptrend into mid-March. So if you want to wait a little bit and see if we pull back for new entries, that could also be a play. I would think that we would test this area here, and if this holds, we could look to possibly zip higher. I want to remind you of Trade Thirsty's Traders Roundtable 2017. Takes place this Saturday, February 25th from 9 a.m. to 3 p.m. Eastern. I would encourage you to go ahead and click the link above and register now. This event is already filling up fast. We've got a great lineup of 6 professional traders. Rob Hoffman with BecomeABetterTrader.com, Hubert Centers from HubertCenters.com, Stephen Bigelow with CandlestickForum.com, Rob Booker from RobBooker.com, and then rounding out the session here, Steve Primo, SpecialistTrading.com, and then last but not least, Larry Gaines with PowerCycleTrading.com. It's going to be an incredible event, 6 speakers, free of charge. Click the link above, and we hope to see you there.